Hello, welcome to my YouTube channel. With me, I am Andrio. I'm currently a student of Executive MBA of IPMI International Business School, and I'm here. I'm going to share to you about the things that I've learned from the corporate finance course facilitated by Prof. Sembel. He is a good, he's a very interactive academician during the course study, and also he is experienced practitioner in the corporate finance. So we are so lucky to be taught by him. Before sharing about the things that I learned through the mind mapping concept, I'm going to share to you about the learning experience in the corporate finance. The first one is it is a learner-centered learning, so we discuss a lot during the course. And then the second one is we have the investment simulation, so we are divided into 5 groups, and then we have to choose one company to invest. And then it is really fun because we have to see the progress every week. I am with no background in investment. I learned a lot from this session, from this learning. And the third one is company analysis. So we have to do the thorough analysis. So we have the interim report one, interim report two, and also the whole report for the company that we just were on. And then the fourth one is about creating the YouTube videos. Like you see now, is the mind mapping video of things that what I learned from the corporate finance. The next video would be about the book that we just review, and the third one is about the evaluation of the recently IPO company. So wait for the next video. And as a helicopter view of what I've learned with the corporate finance, it is about the financial management. What is the financial management? So it is the optimal orchestration of the internal and external financial resources towards significant and sustainable value creation. So that's the financial management. And in doing that, we have to think, company have to think about the risk and return, because we have the return on one side and the risk on the other side. So we have to measure that. Is it the low risk, high risk? Yeah. And the third one is cash, not profit. Is a thing, because the company needs money, real money, not only the money on the for the report. But more than that, is that equally more important is about the people management. So corporate finance is not only discussing or learning about the cash, but also the people management behind it. So we learn about the principal agent problem, we learn about the good corporate governance, and also we learn about the conflict of interest of the stakeholders. Last but not the least, we also learn about the ethical behavior during the conducting the business. So without further ado, I'll share to you about the mind mapping of the corporate finance, start from number one to the number eight. So let's go by detail. So the first thing that I mentioned to you already is about the financial management. The goal of the financial management is value creation. So in achieving the value creation, what need to manage? So these are the things that need to be managed. Start from the capital structure into the risk management. And in order to do this, a company they have to follow the good corporate finance, good corporate governance. It is the abbreviation of tarif, yeah, transparency, accountability, responsibility, independency, and fairness. Like I mentioned to you before, in financial management, we also have the principal agent problem. Yeah, it is happened because of the asymmetric information, moral hazard, and also the conflict of interest between the stakeholders. And also from the financial management, we learn about the 5 business essentials presented by Ram Charan. It's about the cash, profit margin, velocity, growth, and customer focus. So in this part, we are introduced to the word of financial management, what comes to our mind. So those are the things that we learn during the first meeting on the financial management. Second part, we learn about the capital budgeting from the time value of money and also the method of the capital budgeting. We learn about the present value and future value of money. And from the method, we have the NPV, I, and IRR. Among the three or four methods of the capital budgeting, NPV or net present value is most preferable. Yeah, and in the next part is about the investment simulation, like I mentioned to you before. We did the securities analysis from the fundamental analysis and also technical analysis. In the fundamental analysis, we have to think about the industry analysis and also the company analysis, or the ratios. We learn a lot about the ratio. And in the technical analysis, we learn about the momentum versus reversal, the trend of the company, support, gap, and triangle, symmetric and asymmetric in the technical analysis. The next part, we learn about the capital structure, especially the theory of the capital structure by Modiglieri and Miller. Also the factor, yeah, the profitability, tax rate, volatility of cash flow, and also the credit rate. The next part, we learn about the corporate restructuring. So we learn about the financial distress. Is it a turnaround opportunity of company, or is it permanent problem? The company has to decide, has to measure. And when the company know that this is turnaround opportunity, they have to do the surviving and transformation of the business, starting from the stop bleeding until the finding the new ways of doing business in order to survive. Yeah? And also we learn about the restructuring, started from the capital structure, working capital management until the risk management in doing the corporate restructuring. To help us to understand more about the corporate restructuring, we learn about the case study. It's a Nabisco. We learn about the leverage buyout or LBO. The LBO, we learn about the lower WACC, tax shield benefit, and also the conglomerate. And we learn more about the risk management. We learn about the obstruction, misappropriation of asset, and fraudulent statement. And we learn about why the fraudulent it happened because of the opportunity, because of pressure, and also rationalization of the actor. And also it's about the whistleblowing of telling information about any misbehavior in the company. And also last part of the fraud risk is learn about the four type of incentive: physical, monetary, social, or moral. And the next part is we learn about the international finance, learn about the forex, a little bit about the history of money from gold standard, fixed exchange rate to the floating rate system, and about the foreign exchange transaction from the spot, interbank, to the forward market. And here we also learn about the arbitrage, both and also including the international arbitrage. The last part is it was really fun because we did challenge the professor in the class. We learned about the dividend policy, why the company should pay dividend. What I learned so far, as far I remember, is about the tax benefit. Second part is about the showing the shareholders that the company is having a good performance. So that's why company pay a dividend. So those are the things that I've learned from the corporate finance. It helps me as a professional to understand more about the financial in the company. And I hope that it helps you as well as a future student of Master of Business and Administration. And I do hope what I learned to you today, to share to you today, helped you to learn more about corporate finance. If you find it useful for you, just click the like button. And also, if you find something useful from this session, the credit belongs to Prof. Sembel as the professor who facilitated this program. If you found something that needs to be improved, just let me know in the comment section. Thank you. Don't forget to subscribe to my YouTube channel. Bye-bye.